Okay, hello and welcome to this training guide, right? In this particular video, I'm going to be teaching you a specific strategy that you can use to be trading the market and making money out of the market, or helping you to make more decisive decisions when you want to enter trades, what to look out for, what to analyze when you're entering a trade, how to enter, how to exit the market, where to set your stop loss and take profit. So these what we're going to be looking at in this video. So I'll try to make this as short as possible so that it's easy for you to just work with. So first of all, what we're going to be looking at is the market structure strategy, right? So how to trade with an understanding of market structure. So and then we'll look at that. That's this major strategy that we're looking at, and then we'll also look at how you can set up your stop loss properly and your take profit levels as well to ensure that you actually make profit out of the market, right? This is what we're going to be looking at. So if there is time, we'll still look at something else under risk management that will also help us. Okay, so first things first, what is market structure? So market structure is just um, being able to identify or being able to recognize what the market is doing at that particular time, at that particular point in time. So, how do you recognize market structure? There are three major market structures that we actually have in the market. There is another one that I will want to add here, which is a market consolidation, right? When the market is consolidating. Some persons try to refer to that as ranging market as well, but I like to differentiate them. So we have the uptrending market structure, we have the downtrend market structure. Before we have, you see the ranger market and the consolidation market. So without wasting any time, I would just want us to go into the market and see. Okay, so there's something I'm going to add here as well, which is break of structure. That is break of market structure. So this is going to work best for somebody that is trying to analyze the market on their own and also take trades by themselves. In fact, it's still going to help you if you are trading with the trade signals, because it means that you can easily take this knowledge, look at what I'm sending to you. So you look at, okay, this is where the market is right now, and this is where you can set your take profit, this is where you can set your stop loss levels as well. All right. Okay, so first, we're going to look at the uptrending market structure. What exactly makes up an uptrend? So an uptrend is literally made up of. So for you to be able to recognize that, okay, right now when you open your chart, for you to be able to recognize. And before I get into that, I will also have you know that these systems, these strategies, they work best when you are using them on your laptop, not on a smartphone, because you can't see that much widescreen or data on your phone. So they work best when you're using a laptop. Okay. So now, how do you recognize an uptrend? An uptrend usually consists of higher low points, higher lows. Okay, let me spell that out. Higher lows. You can, yeah, higher lows and higher highs. Higher lows and higher highs. So when you see the market forming higher lows and higher highs, then you know that this is an uptrending market, right? It's same thing for a downtrend. So on a downtrend, you can easily recognize it when the market is forming lower highs and lower lows. So like I said, we are going to go into the market to see what this means and how to actually use it. For a ranging market, it means that the market is literally fluctuating between um, market movement between a resistance and support level. So we are also going to look at this as well and see how we can apply that in the market. Okay. All right, so let's start with uptrends, for instance. So what makes us an uptrend? We've already identified that an uptrend consists of a series of higher lows and higher high points. So for a trending market, you can always use your what do you call it now, your trend line to also you know like identify your trend properly. Okay, you can draw or mark a trend line from this point, from here, from this point up until this point, right? And just like that, just like that, at every point in time you're in the market, there is always a structure. So first of all, the first thing you want to do is identify the structure. Okay, so now how do you recognize a higher low and higher high point. Now let's look at this market, right now. First of all, this is a low that the market is at. Please follow my cursor. This is a low that the market is at. This is another low that was also tested at this point. So now this low is higher than this low. So what is this called? This is called a higher low because it's higher than this low. This is also another higher low. Is a low point, right? Because the market had moved up until this point, then it came back down. So this is a low point. But guess what? This low is also higher than this previous low. So this is a higher low. So if we keep checking across the chart, you will see that this is another higher low, this is another higher low, and I hope you can see my cursor. This is another higher low, higher low, higher low. Right now the market is actually coming back down, and hopefully it's coming back to do what, to form another higher low point. So you can tell, okay, so we've been able to establish that this market is forming what, higher lows, and not just higher lows, it's also forming higher highs. So this is a higher low, but this is a higher high. Now remember, this is a low, but this is a high. This market has been able to beat price at this at the point, was able to beat this particular high and went up to as far as this high. So this is a higher high, right? This is a higher high. Then this is another higher high. This is another higher high, higher than this one, higher than this one. This is yet another higher high, higher than this one. This is yet another higher high, higher than all the previous highs. So what does this tell you? Like I said, an uptrend consists of a series of higher lows and higher highs. So you seeing this, you know that this market is what is currently on an uptrend. Why? Because it's forming a series of higher highs and higher lows and higher highs in the market. So it's also, just understanding the structure helps you to understand what is actually obtainable in the market, or where you are in the market right now. So this is a higher low point, a higher high point rather. A higher high point also can also make for a resistance level. So you can see my indicator here that it is pointing to a weak resistance. If you can see it very well, this is a weak resistance level. So this is a resistance. So this is another resistance. Even so every higher high point you're seeing here is a resistance. Every higher low that you're seeing here is a support. And what do you do at resistance? You sell. What do you do at support? You buy. So that's also like another way for you to, but we're going to get into that hopefully. I don't want this video to be too long. Okay, so now that is that about that. So you have understood, I believe that with this you have understood what an uptrending market structure looks like, and what you should be looking for to identify that this is a higher high point. This is an uptrending market structure. And of course, what do you want to do in an uptrend? You want to take buy trades on an uptrending market. Means because the prices are going up, they keep appreciating, they keep rising. So you want to take a buy trade on an uptrending market. So you being able to identify this helps you to also make the decision. Okay, since the market is an uptrend, let me wait for to enter a buy trade. So how you're going to trade, we are going to get into that. But let's first of all look at like a downtrending market and a ranging market as well. Okay, so yeah, this is an example of a downtrend. So if you look again at the example of or the explanation of what a downtrend means, it means the market forming a series of lower highs and lower lows. Correct. So now this is a high, but what happened after that high formed? The market started making a series of lows, right? Higher lows. So this is a low that the market formed, lower than this low. So this is low, but this is lower than this low. This is lower than this low. This one here is lower than this low, just like that. So you see that, and you are able to identify that, okay, the market is making what, lower highs and lower lows, because this is a low. Alright, this is a high, remember this is a low, but this low is lower than this low, so this is a lower low. This low is lower than this low. I hope that you can see my cursor. So this is a low that I'm talking about. This is a low, right? But that low this is another low, lower than the previous one. This is another low, right, also lower than this previous one. So it's making a series of lower lows and lower highs, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. So when you see that, you can then identify that, okay, this is a downtrending market structure. Okay, so let me use what is here, what like this brief it is not so wide, but we'll just use that for the sake of this explanation to explain a ranging market. So like I said, in a ranging market, like just what I put here, is literally the market consolidating or ranging between a resistance and a support level. So if you look at this markup that I have here, when the market got to this resistance level, it could not break beyond it and came back. It came down. It came down to this support level. Once it came down, it started up to the resistance level. It came down again just like that. Now a range can be wider than this. A range can be this wide. So yeah, a range can be this wide. Okay, so still it does not mean that it's going to move just in a straight line up or down. It can still be having, like a series of higher lows or higher highs in between, but overall you know that it is literally fluctuating between a particular resistance and support level. That's what you can see from here. Okay, let me see if I can mark that out. Shapes. Okay, so between this, once the market was able to get into this zone, this is what happened, right? This is what happened. Yes, so this is like the range, right? This is the range. This is the range. It's a very short one. Like I said, we can find, like bigger ranges in the market, of which of course there are, right? Okay, so that's about that. And then even if you were to check between here, between that support and this particular place, this is also a resistance and a support level. Can adjust this a bit, right? This is also a ranging market getting to this point, coming back down, getting here, coming back down. So it went above it a bit, but it could not even sustain, and it just came right back down just like that before it was able to eventually break below, break above it. So this is what a ranging market looks like. So that will bring us to the idea of okay, so before we talk about how you can trade, now let's first of all look at a what do you call it now, let's first of all look at a break of market structure, because a market can be on a downtrend today, tomorrow is on an uptrend, or it can be on an uptrend in the morning, the next minute is on a downtrend. So how do you identify when a break of structure has taken place? Remember, this is very important if you actually want to understand where you are in the market, to know what to trade or how to go about your trading. Okay, you want to, because if you're going to make a decision to buy or to sell, it is based off of market structure, so you always want to be sure where you are in the market. So for this entire time, the market was on a downtrend, but at some point it broke out and started going up. So how do you know that a breakout has occurred in the market? Okay, so now, like I said, the market is making on an uptrend is making a series of higher lows and higher highs. On a downtrend is making a series of lower highs and lower lows. So when does a break or structure take place? So for instance, this has been a downtrend, right? This has been a downtrend. So at what point did it now do this uptrend movement? At what point did it break? The point at which it breaks is this. Remember, what makes a downtrend is, now we are looking at a break of structure from a downtrend to an uptrend. Now the market was continuously um making a series of lower highs and lower lows. So this is the last lower high that it made right here. This is the last lower high. So if it wanted to continue this downtrend structure, guess what? It will just keep going down, keep making lower highs and lower lows, lower highs and lower lows. But once it got on this very day, this was a Friday, the market got to this lower high point. It did not go back down. Instead, it got to the high and it broke above the high and just kept going like that. So at that point, when this particular high was broken, then we can say, this trend has what? It has broken. So when this break happens, so the market, instead of the market beginning to make continuing to make lower highs and lower lows, it will now start doing what? It's now start making higher lows and higher highs. So for this particular day, I guess this was a high impact news day, because the market just moved up without, like even coming back down or anything. But by the point time it will make a higher low point, this was on Monday, right? So if you are on lower time frames, it will help you to actually like make and be able to see it happen like on a lower time frame, and then be able to trade. So you didn't have to wait for that long before you be able to enter a trade. If you go to a lower time frame like 15 minutes for instance, or 5 minutes, you will see an opportunity to actually enter a trade around this level. Okay, so but I'm using the 1 hour time frame for this. So now this is a higher low point that it made. So at this point, you can say, okay, the market is already on an uptrend. So let me do what? Look for a buy opportunities. Like I said, there are still ways for you to enter this trade. I'm just talking based off of what we are doing currently. Then you enter a buy trade around this point and take it up. Okay, so at this point, when the structure broke, when this lower high was broken, and instead of a new lower high forming, a higher low started forming, higher high started forming, then you know that a break of structure has taken place. So this is from a downtrend to an uptrend. So let's also see if we can see from an uptrend to a downtrend. Let me see one that is. So this is also it too. This is like from, okay, this is still from like a downtrend, right? Or is it? Okay, yeah. So this is still like from a downtrend. From a downtrend. So you see the market make the last higher low right around those points. So this is a lower high. So sorry, lower highs. This is a lower high. This is another one. See, this is the last lower high. But after the market made this lower high, it didn't make any other one. It didn't make. If you want to consider this, we can also consider this actually as a coming. Sorry, that's not what I wanted. Okay, so you can also consider this, especially if you're on a lower time frame, you can also consider this like another higher low point, right? Lower high point rather. So, but after this point, a new lower high did not form. Instead, what started forming? Higher lows. This is a higher low. This is a higher low. This is a higher low, right? This is a higher low. This is a higher low. So at that point, you can say, okay, you know what? Market has changed direction to an uptrend. You can even also draw your trend line tool along it to also be able to see that even more clearly. All right. Okay, so that's that about that break of market structure. Okay, I said I wanted to take one that would show from an uptrend to a downtrend. Okay, so this is still like an uptrend, right? Higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, just like that. So, but this is the last higher low for the uptrend. But immediately it got here, it was not able to form. Okay, we can use this. Sorry, let's use. No. So this is the last higher low that it formed. After it formed this higher low, it was not able to form a new one, right? Instead, it started coming down, it started depreciating, forming lower highs, right? Lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. But this is where the break of structure took place. By the time it broke, see, this is the higher low, the last higher low that it formed for the uptrend. So by the time this market started selling and broke above this, that then we can say that a break of structure had taken place. Then it came to retest that particular level and started coming back down all the way. So you see that having an understanding of this can even help you. So you when you it helps you to make informed decisions. So the market is currently, let's say it has broken the structure, it has tested the level. So just imagine that you entered a trade here and you held that trade all the way from this level, right? From this level, right? You held the trade all the way from this point down to this level. Imagine, let's see how many pips that is. So let's say you enter the trade around here up until this point. This is about 46 pips, and this is a whole lot of money. This is a whole lot of money. It means if you were using a mini lot size of zero point 0.1, this can easily translate to 46,000 for you. If you were using maybe a standard lot, this easily translates to about 460,000. If you're using a micro lot size of 0.01, this would be about just 4,600 or thereabout, right? But this is actually good money. So if you're able to have this knowledge, you see what you can actually do with it or what you can actually make out of it. Okay, so I hope that is understood. So for the ranging market, that one is simple to trade. So you're entering a buy at support level, you are entering a sell when the market touches the resistance or hits the resistance level. Is that simple to trade, really? Is that simple to trade? Okay, so moving on from there, let's look at how we can. Okay, so we've touched on market structure, we've touched on break of market structure. So let's look at how you can actually enter trades on an uptrend on a downtrend using this information that we have: higher lows, higher highs, and lower lows, then the ranging market as well. So let's look at how we can enter trades and before we apply to stop loss and take profits, and that will be it for this particular strategy. Okay, so again, I'm going to use this like we used earlier. So of course, let's say the break of structure happened here. This is the last lower high. So the break of structure happens here, right? Now the market is now on an uptrend. So let's say, like I said, the for higher lows and higher highs, right? Your higher low also serves as some form of support. Your higher high serves as some form of resistance. Same thing for an uptrend. Your lower high starts as a form of resistance, lower low starts as a form of support. But this is an uptrend, so you want to be taking more of buy trades. So somebody like me now that already has the expertise, has the knowledge in the market already, I can decide to take the buy trade since I know it's an uptrend. I can decide to take a buy trade from here up to this point. When the market gets here and starts selling back, I can decide to take a sell. So but that is when you have actually gotten that level of knowledge and all of that. Okay, so now you can always enter your trade at the buy sorry, at the for a buy trend. You can always enter your buy at a higher low point, right? You can always enter your buy at a higher low point. Of course, there are other things that you also want to consider before you enter your trade. You want to consider your support and resistance, you want to consider your trend line, you want to consider you can also consider Fibonacci, you can consider your candlesticks, but those are actually beyond the scope of these particular strategy guide that I'm giving to you, right? If you want maybe access to that, you can talk to me about that, right? Although I'm giving this to you like absolutely free because I already promised I was going to do this, but not for that particular one. That is more sophisticated and all. So but let's just focus on this. So um now, like I said, you can take your buys as higher low points, right? So if you're taking your buys at higher low points, it means you can also take your profits at a higher high point or before a higher high point. You can choose to do that, right? So let's say you took a trade here. Let me use my shaping tool. So let's say you took a trade here. Sorry, coming. So let's say you took a trade here. Took a trade here, and that trade got up. This is the higher low point, right? There's a higher high point, so you could have taken a trade right around here. Once the low was formed or was established, take your profit at this level and make really good money out of this market. You could have taken your profit here as well. It all depends on you. You could even take your profit here. It all depends on you. So you can enter your trade here, take your profit here, enter your trade here, take your profit at close of business, because this is Friday again. So you can also, if this were maybe like this is Monday, right? So if you had left your trade open, you could have taken your trade, your profit here, taking your profit here, or taking your profit here, or taking your profit here, and so on and so forth. That is how it works, right? That is how it works. So yeah, that is that about that. That's for an uptrend. So how about when you want to enter a trade on a downtrend? It's still the same thing. So let's say you want to enter your trade, like I said, at lower high points and lower low points. So since this is a downtrend, lower high points are your points of resistance, and that's where you want to enter your trade. So you could have entered a trade from this level up until this level. You could have entered a trade from here up until this level. You could have entered a sell trade from here up until here, entered a sell trade from here up until here, and the entire time enter a trade even from these levels up until here and be able to make your profit. On a range, like I said, you could have entered a buy at, so let's say these two lines that I have here are for a ranging market. You've already spotted the range or you've already marked it out. So you could have entered a trade at this support level. This is support, right? Enter the trade at this support level. Once the trade gets to this resistance level, you take your profit. You can enter, then you can then enter for a sell at this point, right? So this support back to this support, then enter a trade again from this support back to this resistance, enter in a new trade again from the resistance back to the support, and so on and so forth, until eventually the market is able to break below the break above or below the level. Okay, so let's say for instance, you've been trading the range, and at this point the market does not stop here. Instead, it moves all the way down, right? So once this happens, you know that the break of structure out of this range has happened. Okay, so once that break of structure happens, then you can enter. If then maybe the market does the um, one goes back to test the support that has now become a resistance, then you can consider. So that means market structure has changed, so it's now a downtrend. So you can start taking your you can take your sell from here, write it down. Once it makes a new lower high, take your sell, write it down. It's just the same way. So let's say it had gone up, it was going to break above, right? So let's say it was going to break above, so it goes all the way up, right? Instead of coming back down into the range, it goes up, it comes back to test this resistance that would now become a support, because that means if it's breaking above, it means it's trying to form an uptrend, right? So what do? You want to enter your buy around this level and just take it away. Okay, so that is that for how you can actually enter trades in the market. So just for clarity purposes, I'm just going to delete this and exemplify the um, I'm going to just use the uptrend to exemplify again. Okay, so an uptrend, the market is on an uptrend, like so, right? Let's say it's on an uptrend like this. So this is a low, it trades up onto this point, forms a high, it comes back to test the low that is higher than this low. So this is a new higher low point. So it goes back. So from here, you take a buy trade all the way up until here, right? You take a buy trade. Once it gets here, it starts selling, right? And then you take the sell up until this point, gets here, forms a so it forms a higher high that is higher than the previous high. It comes back to form a low that is higher than the previous low, making it a new higher low. You take the trade up until here, just like that, until when this trade, it keeps trading, it trades up to this point, it does not rest there, it breaks below. So it breaks below, and then it begins to form um lower high points instead of lower lows. So at this point, the uptrend is broken. Now we have a downtrend. So the downtrend structure is forming. So this is the first lower high point, right? This is the first lower high point. Take it all the way here, right? And then what happens again? It forms a new low, right, lower than the previous one. Then it comes back to form a high here, right? It forms a high, then a lower high, then it comes to form a lower low, just like that. And you can always use your points of your trend line tool to actually like map out your structure and all of that. So this is how this particular strategy actually works. So you're taking your entries for your buys on an uptrend at higher lows, you're taking your entries for a sell at lower high points. Trust me, if you do this, you should actually be seeing good results and good profits, because from the examples that I gave you, you can see that once the market got to those particular levels, right? Okay, so let me show you again. Let's just be sure. So once the market formed this lower high point, the market never came back down here, it just kept going, right? From here to, it didn't come back here to play around maybe below this area, it just kept going. So you are sure that you're actually going to make a profit. So of course, nothing is set and stone in the market. It's not just going to move like where is this now? It's not going to move in an uptrend just like this, come down just like this, defined like this. But having the information will actually help you. It's just like you are seeing here now, right? If I were going to draw this out, it will be looking like this. To be looking uh, like this, and then I draw this too. So nothing is set and stone. But I hope that you understand this strategy that I'm showing you now. If you are able to apply it, you will actually see a difference in your trades or in your trading. Okay. So that's about that on entries, how to enter in on a trade. So for instance, I have a client that is currently on a trade on Euro USD, and this client was considering closing these trades, even like from Friday or from this morning, right? Was considering closing this trade because that trade has been on since Friday. And I looked at the market; it's already forming a resistance around this level, so it's not good for you to close your buy trade here and close with like a whole lot of loss. So why don't we wait? Let the market do its retracement. So at the point where it's concluding the retracement, if it gets back to your entry points, then you can go ahead to close without any loss. But if it doesn't happen, then you close with minimal loss as at the time that it is going to it finishes forming this particular um, next higher low that it is currently forming. So you see how it can actually help you to have better decision, but better informed decision on the market, how to use it to enter trades, how to use it to enter your trades, take profit on your trades, how to also use it to sustain your trades, whether they are in profit or they are in loss. Okay. All right, so that's that about that. So I think we've able to touch on. So I didn't add entries here, so let me just add that entries for both for uptrends, downtrends, and ranging markets. And ranging markets. So I said for buy at higher lows, at higher lows, right? On an uptrend, sell at lower highs on a downtrend. Then on a ranging market, buy on a ranging market, buy at support, sell at resistance. Okay, so it's as simple as that. So we're able to touch on all this. So we're going to look at the next thing we're going to look at here is how to set your stop loss, and we've already talked about how to set take profits, right? But we'll just look at stop loss. So, but before I go into that, this is what I want to show you. Now, I'm still going to use an uptrend, this uptrend structure for this. So this is a higher low, this is a higher high, this is a higher low, this is a higher high, this is a higher low, this is a higher high, higher low, higher high, and so on and so forth. So I said enter for a buy at a higher low point so you can make a profit. Now, if you enter for a buy at a higher high point, what do you think will happen? You enter your buy here, the market starts selling, you are in drawdown, you are shouting, your trade is in drawdown, you don't know what to do, you are losing money, or yeah, every single time maybe you're just entering trades randomly without understanding market structure, and you find yourself losing money all the time, and it feels as if forex is a scam, or the profits that you are seeing, they are not being real or anything. But if you enter your trade, a buy trade at a higher high point, you find yourself losing a whole lot of money. So this is why you should understand market structure so that you know where the market is currently. Like the market is on a retracement, a sell retracement right now. You don't want to jump in on a buy. You want it to conclude this retracement, form the next higher low before you enter a buy trade. If you had entered a buy trade from this morning, that would have been very terrible, right? You want to wait before you enter your buy trade. Also, since you now have knowledge of market structure, where do you think this is the last higher low point is? You can answer that question for yourself. So this is the last higher low point, right? The market touched it once, two times, three times. So until this particular structure is broken down, and let's say the market now comes all the way downward from where it is, instead of it maintaining, and you in fact you even see the trend line maintaining. So these are all like a whole lot of things that I teach under like a specific strategy. Like I said, it's not covered under the scope of this particular video, right? That literally combines all the different technicals that you should look at before executing a trade, or that you can add together to execute your trade. So it's only when this, if it does not respect this trend line, and it does not respect this support that it has been respecting for the last 3 days, then it now breaks below it, right? Like this, it breaks below it and comes back to retest it, and instead of forming a new higher low, it breaks that structure and starts forming lower highs. Then before you can actually consider entering in on sales. Hope that's clear. Okay, so that is that for that. Same thing for your downtrends as well. You don't want to enter a buy on a lower high point. You don't want to enter a sell rather on a lower low point, right? Let me see. You don't want to enter a sell on a lower low point like this. For instance, this is a lower low point, this is a sell, this is a lower low point. You don't want to enter a sell here. When you enter a sell here, what happens? Market starts going up. What's going to happen to your trade? You're going to be in loss. It's same thing for this point. You don't want to enter a sell here. You want at a lower low. You want to enter at a lower high. That's when you'll be able to make profit with minimal drawdown. Okay, so how about how to enter, how to set a stop loss? It's very simple. Okay, so if I say you can enter a trade at a higher low point, it means that you're entering your trade. Let's say you're entering your trade around this level, assuming that all of these had not actually formed in the market. You're entering your trade here at, let's say, price 1.09152, and this is just the method that we use to analyze trades for you. And I can say, okay, you know what, there are different places you can take profit. You can take profit at the next higher high point. You can also take profit. You can say, okay, this is a high that the market was able to get to. I can take my profit here at 1.09445 for a buy trade. I can take my profit here at this level again. This is okay. No, this, let's say that we are assuming that that had not formed as at that time, but let's say the market got to this point and then it started forming these cells. You could have taken your profit here. You could have taken your profit anywhere as long as you've made some profit. Okay, you could have taken your profit at any level. Now um how about your stop loss? So this is why laptops are good. So it's easy for you to actually spot where to place your stop loss. So now, like I said earlier, if you watch, the market never came back below these levels. So you can easily say, okay, you know what? You set your stop loss below the higher low points. Set your stop loss below this level. Below this level, your stop loss can be here. Let's say maybe your entry position was here after this candlestick formed, after this low was established. Please put your stop loss here, your entry position is here, and guess what, you would have made profit without even encountering any loss. So of course everything is not set in stone. There are still times where this trade can the market can come back and touch a stop loss. It happens, but trust me, that does not make it a bad trade. You did everything right, the market just did their thing, but you're able to do this consistently every single time. You find yourself making more profits than losses in this market, and making consistent profits in this market using this particular strategy. This has been my strategies for the longest time, all the years that I've been trading. This is one of the strategies that I use. Of course, I said I have like a higher strategy that I even use, but it's just that it's not within the scope of this particular video guide. Okay, so but this will actually help you, give you a great head start. And there is something else. So I'm going to, perhaps if I get like enough persons being interested in that other strategy, right? If I get like enough other persons, of course there are all these terms and conditions I'm gonna use to do this. I've just made this, you know, to give to help you and all of that. But if you need that other one, you can reach out to me and tell me about it, and then we'll discuss the terms and conditions around it. Then I can make that available. Okay, so because there is let's say if you're entering a trade here, there is a way to go about it to ensure that you're actually always profitable, even if you're just doing 50%. Let's say you're just an average trader, you make 50% profit, you make 50% losses, you can still stay profitable. Like you can still find yourself making a whole lot of money, but it all depends on strategy, right? So this is a risk management strategy that is also embedded in that particular strategy that I'm talking about, right? So where, let's say, so I said you can, put your stop loss here just below that level, put your take profit here, and you are good to go. But there is a way for you to trade where, let's say, your entry position is here where I just marked, your stop loss is here, and your take profit is somewhere around here. Okay, so like I said, is all strategy. So imagine your stop loss. That means this is the risk you're taking on the trade. just from here to here, but this is the reward. See how large the difference is. So just imagine that every single trade that you are entering, this is how it is. It means that you are always going to be making small losses and big profits. And if you're making big profits every single time, what is it going to do to your account? It's going to be growing your account. You're going to be profitable the entire time. So that's like a different strategy, like I said, that is embedded in that other strategy that I talked about. So, but so far so good. I hope that with this video guide you have been able to learn and understand what market structure is. Market structure um, trading strategy. I didn't talk about how the trend line applies to this particular strategy like we have here. By the way, this is actually a different indicator that I have here in case you're seeing this, what do you call it now? These triangles or what have you. That's like a different thing altogether. So but how do you use your trend lines to correlate market structure? How do you use Fibonacci? How do you use support and resistance? How do you use candlesticks? That those are what that other strategy actually contain. All right, so it will help you to actually make more or better informed decisions, like I said. So but so far so good, we have been able to cover the market structure trading strategy. I believe by now, if you've watched up to this point, that you now understand what market structure is. You understand the different types of market structures that we have. You understand where or how to recognize when a break of market structure happens. Now you are able to also know where to enter trades, where to have put your entries for uptrends, for downtrends, and for ranging markets. You know you have to buy at higher low points on an uptrend. You have to sell at lower high points on a downtrend. You also know where to set your stop loss and where to set your take profit levels. So, like I said, this strategy has over 70% win ratio if you are able to effectively use it. And of course you have, if you're using a strategy with a 70% win ratio, of course you know that should have like an improvement on your trades. Okay, so that is that about that. So if you happen to get access to this, if you're opportune to have access to this, because I'm just going to give this to just a few persons that I promised I was going to give it to. So if you have you happen to just be lucky to have access to this and you watch it, just make sure that you use it effectively to see what you can do on your trades. And if also you have any questions regarding what I've explained so far, do well to reach out to me. I would attend to your questions. I will explain to you and give you more clarity on anything. Although I feel this is very explanatory, but if there are any questions that you might possibly have, reach out to me and then we will talk about it. Okay, thank you so much for watching and have a wonderful day.